on Australia's business channel. This is Mediaweek.
Thanks for joining us. Welcome to the program. Ahead, Seven West Media's capital raising and what the new CEO had to say about the ad market outlook. News Limited CEO Kim Williams' threat to take the fight against any media regulation to the High Court, and highlights of the Delicious Magazine Produce Awards. But first, Fairfax Media has appointed Jack Cowan to its board as an independent director. He's seen as an ally of major Fairfax shareholder Gina Rinehart, who's so far been denied board seats. Well, for more on all of this, we're joined by our co-host, James Manning, the editor and publisher of Mediaweek. James, great to see you.
Right.
This is obviously a big story we've been following for some time. Well, what do you make of this? I mean, is it a signal that there's been a truce in this battle between Gina and the board?
Well, I think there's some sense finally coming into it. I mean, Fairfax was careful to say in a statement, this doesn't necessarily mean Gina will be getting a seat on the board, but it did specifically say the inconclusive discussions we have had about this will continue. So they're sort of certainly saying, look, we haven't, it's definitely, you know, she still has a chance to get on there. And then Jack Cowan's a great person to have on there, of course. A brilliant, you know, investment track record. And he's been saying all the right things about the Fairfax board. Look, you know, we want to make sure the company continues. We want to, you know, enhance shareholder value. And he says, look, I think it's been a bit of a beat up about the the editorial interference. He says, look, we don't want to, you know, have a say in sacking and firing editors. And he thinks, yeah, you know, but the thing is making sure that the company's a better media beast, if you like.
All right, let's just turn to another story. Of course, we're at the halfway point of the TV ratings year as well, and James is here to take us through the numbers. Obviously, James, we get to this point every year, and each of the big commercial free-to-air broadcasters are all claiming victory in various forms of one or another at this stage. Let's just have a look at the numbers and go through them in detail, and looking at the top 10 programs as well, if we could look at that. This is up to week 28. So the primary channels first, we saw the numbers there with 7 on 23%, 9 21%.
Yeah, they're the all people totals. That's the number 7's sort of putting out to say, look, we're still number 1 all people. But then you sort of start digging into the demographics, and that's sort of where 9 comes in, saying, look, we're actually number 1 in the demos where it counts.
And looking at the performance of the digital channels as well, and we saw 7.2 there at 4% for the weeks 7 to 28.
Yeah, 7's digital channel 7.2. Target's a bit older than a lot of the others, still doing very well. Not a lot of change in those digitals. Probably 1, which is went from being an all-sport channel for a part of the 10 networks offering to more a general entertainment channel. It's probably the biggest mover year on year.
And looking at the combined channel numbers, there you see 7 with just over 30%.
Sure, yeah. Again, that's sort of an all-people thing, and 7 like to brag about that. Look, we're a big all-people TV company, and they're looking good at this point of the year, and they've still got a bigger share of the ad revenue too.
All right, well, let's get the view of advertisers on all of this. Now we're at that halfway point. We're joined today by OMD's Head of TV, Melissa Hay. Melissa, it's great to have you here on the program.
Thanks for having me.
Just wanted to look at, you know, from the advertisers' point of view, who delivered the best audiences in the past 6 months?
Well, it's been a very interesting time. So we saw that those numbers, I think, are a bit deceptive because it's actually been very up and down. The first quarter, you would have thought everyone wanted to be with 7. They dominated. And then we saw The Voice and The Block launch and 9 come back, and now it's actually neck and neck, especially on those demos. So advertisers are probably fighting to be with both of those networks. It's depending on what exactly they want. I think 10's probably the one that people are a bit unsure of at the moment.
You know, I think when we had you on last time, and some of the advertisers we spoke to, you got it pretty right. You were predicting that, look, 9 would come back this year. A lot probably better than we thought, you know, because we thought maybe 7 would be very dominant, and they started the year that way.
Yes.
So what sort of things alerted you to the sort of turnaround at 9?
I think the way they had approached what they were doing for this year, especially on that 7 o'clock time slot, and talking about how they were going to put in that sort of programming that resonates with Australians. We've seen all the #1 programs are Australian programs, they're that reality type, and they had said they're going to go in there and own that time slot. Yes, they started off very badly, so I was very nervous about my first initial thoughts, but then they got it together, and obviously the block came back in and The Voice. So, and the other big difference I think as well, and is the way they marketed their program. So The Voice, they did a really strong job on marketing, and it made all the difference. And I think Seven did really strong job on marketing Revenge and My Kitchen Rules as well, which really helped them.
Just, you mentioned there about 10 and you're not quite sure yet at this stage which way it's going to go. I mean, there has been a bit of a ratings recovery there recently, hasn't there, with especially with MasterChef. And is that maybe because of the lack of opposition? And do you see this continuing? Or?
I do think it's because there hasn't been enough other content on there, but it also proves the point that MasterChef is actually a good show. So it's strong, it can get the numbers, and it probably started after the block, so people are already bought into a show, and I think that didn't help them. So it's a 5-night-a-week show they buy into. It's hard to get them to buy into 2 programs like that. So I think next year they probably need to think about that and the timing and what they're up against a bit more, because previously they haven't had that type of opposition. So I think there's still a lot to come from 10. I think they've got a little way to go, and I think they'll pick up in the second half on those younger demos.
Staying with 10 for a sec, a lot of reality TV action there. We've seen Being Lara Bingle, and that's sort of, they've got The Shire now. There's a lot of discussion about that. You invest a lot of money on behalf of TV advertisers. Is there demand for that sort of content? And given, I guess, 10 are getting okay numbers for it in those younger audiences.
It depends on the product, so I wouldn't say there's a lot of demand, but it depends on the product that the people are advertising, whether they want to be associated with those programs. Anyone targeting a younger youth audience, they think that want to be cool and funky. If the show delivers that, they would be associated with it. Female products, Lara Bingle for young girls is still someone that they would look up to, so it is still relevant, but on the mass board, probably not something that a lot of advertisers are really chasing down.
I just wonder, because there's a couple of shows coming up as well. There's Sarah Murdoch, Everybody Dance Now, and I Will Survive. How do you think they will go? Because I guess they're more sort of family targeted, perhaps?
I think Everybody Dance Now will actually do quite well. So the one thing 10 have done this time is that they're not relying on one program. They've got a lot of programs there. They're not stripping anything across the night. So Everybody Dance Now, 2 nights a week. Sarah Murdoch, 2 headline US acts coming in to be the. They're not mentors, but they're not judges either. They're captains of the teams. So I think that will appeal to the younger audiences and young families. So I think it'll do quite well.
Amongst your big advertisers, have you got anybody spending up on Olympic Games sponsorships? And is it hard sort of justifying a big spend for such a short time frame? So what do you need to get out of it?
We do have a couple of big advertisers there, and they're associated with it on a much bigger level, so it's important that they are there and supporting their, I guess, on-ground activations. So it is the right place for them to be. It is a lot of money to spend in that type of 15 days, 16 days. However, it's what they want to get out of it, and we're actually taking it further. It's not just within those 3 weeks. They do a lot of build up to it. There's a lot of other things happening around the Olympics for them. Obviously, McDonald's is probably a key one, and they do all of their in-store and they do all of the lead up to it. So it's not necessarily just about those 3.
I guess just looking to that after the Olympic competition as well, that there is a real heating up of the competition, isn't there, on free to air? And you've obviously picked the year for us, so I just wonder whether you predict what you're predicting for what is essentially only about 3 months of service
left to go.
Yeah.
I think it'll be. I don't want to get it wrong now. I think I got it right last time. I actually think 7 will have competition from 9 on the buying demographic, especially people 25-54. I think it'll be a tight race. If you take out the Olympics, I think 7 can actually get there for the end of the year. Total people, I still think 7 will maintain that #1 position. And I think 16 to 39, you'll see 10 fight back and pull back a bit of their share there that they've lost over this first half and the end of last year.
Okay, there we have it. And interesting too, James, I guess we're seeing the unveiling too of Nine's programs to come as well this week. A lot of sort of crime dramas.
Yeah, they're investing very heavily in Australian content.
Yes.
You know, David Gingell's saying, look, we're spending a lot of money on international programs. They're really not working with the audiences. We're cutting right back on that. So, you know, more Underbelly for next year, a big Gallipoli mini-series. It's probably almost a couple of years away, I think, that one, but they're flagging it very early. So, yeah, spending big money.
Interesting too to hear what the new Seven boss was saying as well this week about the ad market outlook, and saying that, look, it's still weak in the near term, but you know, he says it hasn't fallen off the back of the truck. Is that what you're saying?
Yeah, it definitely hasn't fallen off, and there's still demand there. And yes, there's areas that are soft. So, but any quality programming, it's still being bought and it's still going early. So, yeah, anything that really is good, like My Kitchen Rules or The Voice, they were all in demand.
Melissa, it's been great to have you on the show. Thank you so much for coming on today. Melissa Hay there, Head of TV at media buying agency OMD. Well, now let's just return to that Seven West Media capital raising and get the share market reaction, analyst reaction to this. We're joined by Chris Weston from IG Markets in Melbourne. Chris, what do you make of it?
Well, I think the market's spoken. I mean, I think this is perhaps one of the most anticipated raising we've seen for a while. I mean, I think I spoke about this raising last week being priced in, and I think that we talked about it a month ago. So this was something that the market was looking to see. I mean, what we did see this morning is the stock trade down to $1.40, down to $1.40. Had a bit of a snap back up to about $1.47, and now remains around $1.45. So it's down about 10%. The actual raising itself was done at a 19% discount. The theoretical ex-right price, if you take into consideration the fact there's about 333 million extra shares on offer now, on issue, it comes around 153. So that's the price you want to see it gravitate towards and above. But I think this is very much needed. You know, the 440 million is going to be used to repay debt, so that's going to reduce from 1.8 to 1.4 million. That net debt to EBITDA will still be around about 2.9 times, which, given the outlook of the advertising market, as the CEO said, remains negative. If we do see a substantial deterioration in that, which is not in our base case at the moment, then that balance sheet becomes under a pressure again, and people start thinking about equity raisings. But what we're seeing now, 7.8 times forward earnings, dividend yield of 7%. The analysts are expecting about a 13% decline in EBITDA for next year. So if you think that the TV assets are still relatively compelling, if you think the ad market's going to hold up, you know, you're probably saying this stock's in a reasonable shape now and actually quite cheap, and hence why most of them have got buy recommendations on that. So yeah, long term, it could be an interesting place to be.
Chris, great to talk as always. Thank you. Well, let's just return to the most recent ratings that we've had. These are for week 28 for television, free-to-air first. And James is here to talk us through them. James, what were we seeing
Domestic Blitz, a big hit for Nine. I think we might have referenced that last week at Jamie Dury and Scott Caan getting back together. Big news for them. And MasterChef, you know, holding up 10's numbers.
Yeah, and just turning the page there, and the Revenge also still in the top 10 there for 7. Just looking at the top 5 sport shows on subscription TV for week 28, there, NRL Sharks versus Roosters for Fox Sports 2. And looking at the top 5 non-sport shows, Family Guy. We've had some news too. Sci-Fi Channel to rebrand as SF.
Yeah, I think from next Monday. This is only called SF. I think it's been called SF in the States for a little while, so they're sort of getting into line with it here. New series called Lost Girl, I think it's doing pretty well for them. Still got all the old favourites, even Star Trek you can still see there. And they've even got a reality show called Hollywood Treasure. So reality comes to the SF channel too.
Right, okay, and just looking as well at the UFC.
Yeah, Foxtel an announcement this week that UFC, which I think you used to get on, you could get a bit of it on subscription TV, on the main event, things like that, and also on, I think, on 1 and 10. Those just showed a little bit, but it's now going to be exclusive to subscription TV. Also get it on, still on main event and Fox Sports and Fuel.
Right, okay, and just quickly the Shire as well, we've seen, we're just speaking with Melissa about that, but I mean there's been so much talk about it. How did it actually rate?
It didn't do too badly, yeah. I think it'll end up being the #2 show on the network this week after MasterChef, after the different MasterChef nights, so it did pretty well. I didn't mind it, you know. If you go into that, there's not many people been commenting, but it's, you know, you go in with your eyes open to a show like that, so you get what you expect. Yeah,
James, plenty more to ask you about in just a moment. We're just going to take a quick break. Coming up, though, the highlights of the Delicious Magazine Produce Awards.